Hello everyone, and you're watching Bitcoin Bubble News channel. Also, this claim that Bitcoin isn't backed by anything and doesn't stand for anything has been around for years. That's so beautiful. Bitcoin only trades based on how much people think it is worth and how few of them there are. Because of this, it's a much more honest way to spend. The price of Bitcoin changes a lot, twice as much as the SP or the Nasdaq. But look at how quickly it goes back up. In that case, it shows how much people want Bitcoin. And that shows how healthy the Bitcoin market is right now. Bitcoin is the biggest and best known cryptocurrency, so its performance is closely watched and analyzed to guess how it will move in the future and figure out how people feel about the market. To figure out where Bitcoin is going, investors and experts look at a lot of different things, such as new technologies, regulatory news, macroeconomic trends, and market demand. Bitcoin is known for being very volatile. This is usually caused by speculation, events happening around the world, or changes in investor trust. Because Bitcoin is volatile and can be affected by many market forces, it is even more important to understand its risks. Fred Thiel, CEO of Marathon Digital Holdings, agreed with this sentiment in a recent interview with Robert Breedlove. In the interview, Thiel talked about both the problems and the possibilities that Bitcoin faces in today's changing world. He talked about the trading risks that come with Bitcoin ETFs. These funds buy Bitcoin a day after shares do, which means that their prices can change a lot over the weekend. Thiel warned that regular buyers selling too quickly could flood the market and cause prices to drop a lot. He also said that limited liquidity could be caused by a lot of people owning a lot of shares, like states. He also said that about 20% of Bitcoin keys are lost, which lowers the amount of cash that is available and raises the demand for derivative financial goods. Thiel urged people to be careful and understand these risks because they can affect the security of the market and the amount of money that investors can lose. Do you think there is some risk with ETFs? There is a risk of market liquidity that I think is the biggest. This is one way to look at it. On the open market, you can buy and sell anything. Then there's the over-the-counter business. Most of the time, the ETFs work on a T1 basis. If you buy ETF shares on Monday, they will buy Bitcoin after the market closes or the next day, and it will settle the following trade day. That is, if you buy shares on Friday, they will buy Bitcoin on Monday. This means that what happens to Bitcoin over the weekend can affect the price of the Bitcoin they buy on Monday. A lot of trade goes on around that. As the amount of Bitcoin in ETFs rises, you might wonder how many small buyers are out there. We have bad news. The Nasdaq, the SP 500, or any other stock market drops by 10%. Even if they all decide to sell 10% of their Bitcoin at once, there aren't that many people trading across the open market. That's why you'll probably see a bigger drop when there is one. And the OTC desk might not be able to handle that much traffic. People need to be very careful about how they look at the markets because too much Bitcoin is held by a small group of hands. When those hands make a choice and move, Bitcoin moves. Things can happen that are more deadly on the right than on the left. What's interesting is what's going to happen. There will be a lot of derivative financial tools available in the next 6 to 12 months. These will let people trade risk and hedge risk in the same way that they can trade other commodities. There are many ways to lower your risk in the oil business. This is something we'll see more and more of with Bitcoin as a way to make the market much more open. Because picture a world in which the US government owns 2 million Bitcoin. It's 10% of all the Bitcoin that's out there. Saudis, Russians, Chinese, Indians, and other countries decide to own 20% of the company as a whole. That means 30% of all the Bitcoin in the world is no longer for sale. You could say that at least 70% or about 4 million Bitcoin of the keys are lost, like Satoshi's bank and such. That's another 20% or so. Now you have 50% of the Bitcoin locked up. Then there are the ETFs, which are already at 1% or 2%. Okay, so now you're at about 60%. The market doesn't have a lot of money in it. So either you get in now or things will get harder. And there will be a huge demand on the market for these derivative products. Because of this, the amount of money that is speculated on Bitcoin as a financial asset will grow very quickly in the coming years. Also, this point of view that Bitcoin is backed by something has been around for years. Bitcoin doesn't stand for anything. That's so beautiful. And that is that Bitcoin only trades based on how people feel about its value and how few of them there are. Always, that's it. Because of this, it's a much more honest way to spend. Bitcoin moves a lot, and yes, it is twice as volatile as the SP or the Nasdaq. But look at how quickly it recovers, right? As soon as Tesla reports bad earnings, the stock price goes down. You'll have to wait until the next earnings report before the stock price likely starts to rise again. The German government or MT, Gox sold all of this Bitcoin a few weeks ago. The price went down and then back up again. The price of Bitcoin has quickly gone back up after the dips we've seen. This is because of how much Bitcoin has been put into the market. And that shows how much people want Bitcoin, which shows how healthy the Bitcoin cash market is right now. Fred Thiel talked about how the US could set up a national Bitcoin reserve, pointing out that the US has a history of keeping gold reserves. He said that the US needs to pay off its debt and might invest in Bitcoin, which could gain value over time and help pay off the debt. He said that if the US had 2 million Bitcoin, it would be worth $40 trillion, which is more than the total amount of debt the country has. As Fred Thiel sees it, if the US goes ahead with this plan, other countries will too, since they don't want to be left without a place to store Bitcoin strategically. This could lead to a decentralized Bitcoin mining environment. As a matter of national security, governments keep their mining pools, which forces miners to become more efficient. To learn more from Fred Thiel, let's watch more clips from the talk. Would it be possible for the United States to reach the point where we have a national Bitcoin reserve? If that's the case, do you think that other countries would use the same plan? Of course. The US has more gold than any other country in the world. There is no gold behind the dollar. But gold gives the US a way to show its power in the global markets. Gold is also held as a backup by other countries. Additionally, it was having gold that led Nixon to separate the dollar from gold. Other countries were pulling their gold out of the US system because they saw how much the US was spending and thought it would go bankrupt. The US has to find a way to pay its debts. Getting dollars or putting dollars into things. That's a dangerous situation. This means that the US only has a few options left. Either the dollar has to lose a lot of value or inflation has to be very high so that the debt can be paid off. But that would be terrible. Another thing they can do is put their money into something like Bitcoin that will grow in value over time. And if it can rise in value faster than the total amount of US debt does, then you have something that you can use over time to pay off the loan. Suppose the US held 2 million Bitcoins. If those Bitcoins went up in value to $20 million over the next 10, 20, or 30 years, the US would suddenly hold $20 million worth of Bitcoins, which is more than $40 trillion. The government debt is now $35 trillion and is still going up. With the way inflation and interest rates are now, the government can't pay back that debt. The US will be able to project power in the Bitcoin market as soon as they do it, just like they can with the Strategic Fuel Reserve, because they will be able to set prices because they have a lot of Bitcoin. Everyone else will have to follow suit if the US does it. This is because a country can't not have a strategic store of Bitcoin if every other